Greetings traders. In this video, we will be breaking down the secret to the ICT Judas swing. This is a secret that not many traders know about, and it is one of my main primary strategies I use to make consistent profits in these markets utilizing the ICT Judas swing. If you don't know the ICT Judas swing, this is a very powerful strategy made by ICT himself, and ICT has said that you can use this strategy and just this strategy alone to quit your job in 90 days if you can simply follow these rules and be consistent in following these rules. So this is my main strategy, and I'm going to give you guys all the secret, all the sauce, even a secret I haven't disclosed before in any of my other previous videos. So sit back, take notes, and let's get you profitable. All right, like I said, this is the ICT Judas swing. This is my main strategy. And the very first step to this strategy is that you want to mark the high and low between midnight and 8:30. So I thought, what better way to show you guys and demonstrate the ICT Judas swing by breaking down a trade that I took today on Wednesday, January 15th, 2025 that made me some money. All right, so we have the midnight vertical line right here, and we have 8:30, and we have the highest high between midnight to 8:30 was around 7:07 a.m. and the lowest low between midnight to 8:30 is 3 a.m. So an important concept to know about the Judas swing is that this is a reversal play, right? We're basically waiting for price to move in one direction, fake out all the breakout traders, all the people, the impatient traders, and then once it reverses, we trade that reversal back into the range. So now you can see at 8:30 we had a huge news candle, huge bullish news. I'll be honest, I'm not quite sure what happened, what the news was that made this bullish push. And I thought, maybe I shouldn't trade my ICT Judas swing today because such bullishness. I'm not sure if I want to be shorting from the high of the day, right? Because it's a reversal play. So I guess I'm getting ahead of myself, right? So let's go back to the rules. So you want to mark the high and low between midnight to 8:30. This is what we've done. This is the high. This is the low, and this is the ICT Judas swing. This is the checklist. This is my checklist I follow every day. You guys can steal this and start making these sorts of trades as well. All right. So now that we mark the high and low between midnight to 8:30, we're waiting for a liquidity grab. So a liquidity grab is also called like a sweep, or basically we're waiting for either the high of midnight to 8:30 or the low of midnight to 8:30 to get swept. And what I mean by swept is for price to trade at least one tick higher than the highest tick previous to midnight to 8:30 or the low. So because we swept the highs, right? Because at 8:30 we swept the highs, we're looking to short. Now I'll be honest, typically I don't typically short when we have such a bullish news, just a pure bullish candle like this. But the opportunity presented itself with the secret trick that I'm going to be teaching you guys. So I thought this would be a great video to demonstrate the ICT Judas swing. So you see at 8:30 we push up, right? And some people, so I'll go back to the checklist. Next, we're waiting for a market structure shift, right? So if you don't know what a market structure shift is, it's just a close below. Since we're looking for a bearish market structure shift, since we swept the highs and we're looking for a short, we want to look for a close below a previous swing low. Now, how I trade this, you don't have to trade it this way, but how I trade it is that I wait for 9:45 to 11 a.m. for my kill zone. So, but I know some people that trade the Judas swing, as soon as they get the liquidity grab, they're looking for a market structure shift. So this is our first market structure shift after the liquidity grab. Now, the reason why I don't trade, and I would suggest that you wait till 9:45, 10 o'clock, 10 a.m. and past that to trade this is because prior to 9:30, prior to 9:45, the market is too volatile for me. Sometimes you'll get this. Oh, I put liquidity grab here. My mistake. This is a market structure shift. Right. Sometimes you'll get this market structure shift. You'll get an entry in the market structure shift, and it'll work out. And it kind of does actually work out right here. But I would just suggest that you wait to trade until you're in the kill zone between 9:45 to 11 a.m. So you can see right here we did get a market structure shift, right? Here's our market structure shift, but our next rule says we want to enter in the deepest fair value gap in the leg of the market structure shift between 9:45 to 11 a.m. So someone recently DM'd me, what happens if you get a market structure shift before 9:45 to 11 a.m.? What do you do? And what do? Is I wait and I wait for price to sweep this high, right? So I'm waiting for another liquidity grab and to enter inside my kill zone, which is 9:45, and I actually prefer 10 a.m., 10 to 11 a.m., but sometimes the setup appears earlier. And you can take it as early as 9:30. I just don't like it. So I'm looking for my trade to be somewhere in this hour, 15-minute window. All right. So we get a market structure shift, but it's before our kill zone, right? So we're waiting for price to re-sweep these highs, give another liquidity grab, which we get right here, and then we're looking for another market structure shift. So again, a market structure shift is a close below the most recent swing low. If you don't know what a swing low is, it's a 3-candle pattern where the lowest low where the low is lower than the either candle next to it, right? So this is a swing low, right? This is a swing low. The basic pivot points are where the market uh, reaches deep. So that's a swing low. This is a swing high. That's a swing high. That's a swing high, right? So now we got our liquidity grab. Now again, we're waiting for a market structure shift between 9:45 to 11 a.m. So this was me today. I'm waiting for a market structure shift. So our market structure shift would mean a candle body close, not a wick close, not wicking past. We need a candle body close, the most recent swing low. So that was the market structure shift I was waiting for, right? But we just print in another swing low. We don't close below the swing low, so we keep on pushing up, right? After we push up, I'm waiting for a candle body close underneath this swing low. But we come down, we make another swing low. We can't come all the way down, and we start pushing up. At this time, I'm thinking, maybe it's just going to be like a bullish day, right? So now I move up. I'm waiting for this swing low to get a close below. We come down lower. We reach higher. We print this swing low. And I said, okay, well, now I'm waiting for a close underneath this swing low. And I'm just giving you guys my entire thought process, all right? So now, as price is coming up here, this is also a level on the weekly, if you're wondering what this horizontal line is. We're consolidating right here, so I said, okay, we're finding resistance at this weekly level. Let's see if we can get a close below this swing low. So, and voila. So I hope you guys understand this part and what makes this a market structure shift. If you don't know, like, this is the most important part of the video, like understanding, being able to determine what a market structure shift is. If you don't know what a market structure shift is, if you're having difficulty seeing it in real time, you can look up, find indicators. If you search market structure shift, breaker structure, market structure break, you can find some indicators. But ultimately, I suggest that this is something that you'll be able to identify just with your eyes visually, right? So you don't have to rely on indicators. Okay, so going back to our charts, we had a liquidity grab of the highs, right? Of the high of the day. We had a market structure shift inside of our kill zone, right? 9:45 to 11 a.m. And then we want to enter on the deepest fair value gap in the leg of the market structure shift between 9:45 to 11 a.m. So this is our leg of the market structure shift. This is our bearish displacement leg, right? The leg that closed underneath the previous swing low, right? If we were doing longs, we want to close above the previous swing high, right? Now, the reason why this is coming to the part of the video, like, this is the super secret sauce that no one teaches in any of the Judas swing videos, and I'm giving to you guys for free. So typically, if a market structure shift, let's look back. So right now we're looking for a fair value gap in this leg, right? In this leg that broke structure to the downside. Now, if you can tell, or whether you can tell or not, there unfortunately isn't any bearish fair value gaps in this leg, right? So typically I say, if there are no bearish fair value gaps in the leg, that means there is no institutional sponsorship, and that you should probably avoid the trade. That's what I tell people. However, what I've been doing and what I like to do is, I don't necessarily need a bearish fair value gap to enter on a short with a Judas swing. Not necessarily. I prefer it, yes, but I don't need one. If I don't have a bearish fair value gap, right? If you don't have a fair value gap in the leg of your market structure shift, right? So here's the secret sauce. If you don't have a fair value gap, you could either not trade it, or instead of taking a bearish fair value gap, right, in a short scenario, in this leg of the market structure shift, you can look for inverted fair value gap on the leg prior to the market structure shift. And so if you don't know what an inverted fair value gap is. It's an opposite. If we're looking for shorts, it's an opposite colored fair value gap that got closed under. So this was a bullish fair value gap at one point that got inverted somewhere over here, but it's not in this leg, between this leg and this leg of the market structure shift. So do you guys see a bullish fair value gap? If you don't know what a fair value gap is, it's a three candle pattern where the there's a three candles and the low of one candle does not intersect with the high of the third candle, three candle pattern. So in this case right here, we do have an inverted fair value gap, right? So if you're waiting for a bearish fair value gap, you're not going to get one, right? There is no, price did not have any imbalances or discrepancies when creating this market structure shift to the downside. But there was a bullish fair value gap that got inverted right here. So some people just play inverted fair value gaps. I like to see a market structure shift, right? Now, so here's the sauce, right? So once you get this market structure shift, instead of entering on the deepest fair value gap, right? Instead of entering on the deepest fair value gap, you can also enter on the deepest inverted fair value gap. So that's the big sauce. This is kind of like my secret trick that I use. And sometimes I'll just aim for just enter on the inverted fair value gap, just because a lot of times it'll give you even a better risk to reward. However, sometimes you just won't get tagged in, as opposed to a fair value gap that typically gets rebalanced. So you can see we had no bearish fair value gaps in this leg of the market structure shift, but we did have a bullish fair value gap that got inverted by this candle right here. So after we get this market structure shift at 1036, what can we do? We can enter in on the inverted fair value gap right here with our stop loss covering the market structure shift swing high. So in this case, the high of the day. And we can look to target 1 to 2 risk reward. So this was my trade this morning. So that's the exact trade. So just to go over it again, everything. So here are the rules again, right? So we want I've dropped a lot of sauce in this video, right? So we want to mark the high to low between midnight to 8:30. Here's the high, here's the low. Between 9:45 to 11 a.m., we're waiting for a market structure shift to the downside if we're bearish. If we're bullish, we're waiting for a market structure shift to the upside. Now, if you get a market structure shift prior to 9:45, what do? We wait for that high to get swept, and then we wait for another market structure shift. Now, if you don't have a bearish fair value gap, or if you don't have a fair value gap in your leg of the market structure shift, you can instead look for inverted fair value gap in your leg prior to the market structure shift, right? So here's our inverted fair value gap that we'll use because we didn't have a bearish fair value gap in this leg. We enter in on the inverted fair value gap with our stop loss covering the high, targeting 1 to 2 risk reward. So this is the secret sauce. This is the secret sauce. I don't tell anyone ever about this inverted fair value gap part, but I also wanted to clear up what to do if you get an early market structure shift. This is my main strategy. This is what I trade every day. And this trade setup worked out. You could have gone all the way to the 930 level, but don't be greedy. Just take your 1 to 2. But I just wanted to break this down for you guys. And also, the last sort of thing I want to say is that if you're kind of scared to take this inverted fair value gap, set a limit order on this inverted fair value gap. Instead, what you can do is wait for price to come in and touch this inverted fair value gap. Make sure it's respected and wait for a candle body close outside of the inverted fair value gap, and then you can you can still cover the high. You're going to have a bit of a bigger stop loss, but you don't know, right? There's no guarantee that price is going to reverse here. It's highly likely, but we're not sure, right? So you can wait for that confirmation, a close outside of this candle body closed, right? Outside of this inverted fair value gap if you don't want to take a limit entry. And then you would have a bigger stop loss, but you'd also have a bigger risk reward. So that is if you want a confirmation entry, right? That's your confirmation entry, entering market as opposed to entering limit right here. All up to you and your preference. But this is my setup. This is the ICT Judas swing. I trade this every day. If you guys found this helpful, drop a like, drop a subscribe. If you have any more questions that I can answer about the Judas swing, write them in the comments. And finally, I'm opening up a Discord. So if you guys like this sort of content and want to connect with other like-minded traders, join the Discord. The link will be in the description. All right. Hope you found this helpful. I will see you on the next one. Peace.